Hey, Blockhead Traders. Here at Blockhead Traders, I must inform you that we are not financial professionals. Nothing we say should be considered financial advice. We offer our own thoughts and opinions to you, the viewer. We expect you to take these thoughts and opinions and form your own financial conclusions and make your own financial decisions. Today is Wednesday, November 10th, 2021, and this is Blockhead Traders Weekly. In this week's episode, I am joined by Viper, but not live at the same time. So we have some pre-recorded content from Viper, and we're going to jump into a little bit of an expansion of some of the methodology and techniques that I touched on last week and how I day trade and scalp as far as order templates and order entries. But before we hop to that content, I want to give a shout out for our Discord channel, a link in the description below. We do stream this show live to our Discord every Wednesday night at around 8:30 Eastern time. Additionally, there is a link to thetagang.com/sprocket888 where I post all of my trades, the good, the bad, and the ugly. So you can follow me there, see what I'm trading, and you can check the track record to see, do I actually trade what I say that I trade? But let's hop to this week's content. And in this week's episode, we got a little bit of a time shift here where we're going to use some pre-recorded content from viperxl. He is going to follow a similar strategy that I followed in previous weeks, showing you my day trading setup, my scalping setup. He is going to go through his thought process on scalping, his thought process on day trading. He's going to touch a little bit on some equities. And he's going to dive a little bit into some crypto. And then we're going to hop to an expansion of some content that I had questions on from last week. One of our Discord members was asking about orders and how do I place the orders to close out in a way that you weren't going to hit the order on the upside and then hit the order again on the downside. So how do you set up an entry where, you know, when one gets filled from your take profit or your stop loss, that the other one clears out and doesn't actually get executed. So we're going to talk into some of the order setups that I use in my day trading and scalping strategy and show you in Thinkorswim how you can build your own and save them as a template to use as you enter in for whatever underlying you're trading. Let's hop over to Viper and see what Viper is doing and how Viper is scalping and the stuff that goes through his mind. Viper?
Okay, so let's talk a little bit about my favorite subject of learning through trial and error, and that is scalping. It's a love-hate relationship, and this is very much meant to be a learning out loud moment where, you know, I am by no means an expert in scalping or even scalping techniques. I'm just kind of going through the process, taking some stabs at it, and just learning from my mistakes, learning from what works, and just slowly building that snowball. So this is definitely one of those things that if you have questions or if you have your own thoughts or your own strategies, very much appreciate any comments, hop in the Discord, all that good stuff. Be a part of the conversation, because this is, like I said, thinking out loud. So what I wanted to go over was just kind of how I approach scalping, scalping, or just call it day trading. And it's an important note that, I have not refined this strategy. I am working to refine it. I am getting better. I am having some successes, but I am still getting bit pretty solidly. But it's all about risk mitigation. I never bite off more than I can chew. And I am, even though emotions still play a large role in where I think I have a lot of my failures, I do not let emotions run away on my losses. And I, keep that in mind where I know, yep, here's the limit. I probably, I'll even say, well, on this first chart, I'll show you what I'm talking about as far as the emotions go. So this first thing now is an even more complicated layer where there was a huge IPO today, which was RIVN, ticker RIVN. This is a new startup electric automaker. I personally am very interested in the success and the future of this company. And I thought it was a good time to just, try some rampant gambling on some scalping, day trading of a new hotly anticipated IPO, knowing that there was going to be the volume, because the number one thing you want to focus on when you want to try to day trade something is liquidity. You need that thing to be moving. You need those orders to get rapidly filled. And so obviously on an IPO that everybody's talking about as one of the biggest IPOs we've ever seen, certainly this year, maybe in the last X number of years, whatever. What better opportunity to have some serious liquidity to maybe open up an opportunity for some scalping techniques. So let's take a look at what happened today. So let's hop over here. Here's kind of how I'm looking at this as we go on throughout the day. So we're just going to kind of walk through it as it happened. We opened midday, right about 1 o'clock in the afternoon. That's pretty typical for, IPOs. They do not hardly ever open with the bell. They wait for the market to settle down, and then they go ahead and open their floodgates. So what happened initially? We opened the valuation. I should point out, because that needs to play a role in the calculus that you're doing. Well, in the case of an IPO, you shouldn't be trying to day trade and scalp IPOs all the time, but nonetheless, that's the only reference I had here for what is this stock worth, because you're day trading the trend, you're scalping the trend, but knowing where you are on a potential valuation is important to know. So this thing was set for $78. It was opened here at 105, 106, somewhere in that range. So right out of the gate, it started pumping up here. I opened some shares around 112 because this was this is the 1 minute. We had a very solid pump up, and then we had a harsh drop down here. Did a little bit of emotional not thinking. Took a little bit of a loss there, thought, maybe this is overvalued. Maybe they are running away. This all happened so fast. So the things you need to look out for, or things you need to be watching for, are what kind of anchor points do you have? So obviously we had, as far as anchors, we had on open, we had this. Whether that's the right price or not, that's now a level. That's the only level in the history of the stock at that time. So we have this level. And so, thinking more clearly, I knew I was jumping the gun, because I had no data to suggest any foothold, because that's, again, an important part for scalping and day trading, is know where the footholds are, and then patience for it to arrive at that foothold, and then you place your bet on what you think is going to happen, whether you're shorting or going long. I typically like to, I don't know, it's a mental thing. I like to, day trade the long. So that was a known mistake. Number one is I kind of jumped in before seeing where that foothold was. That's the FOMO. That's the emotions of, I want to get in. So as it came back down, we can see that, it did find that foothold, that opening price foothold. And then we started to get support. My own emotions, my own rationalization started kicking in. So I kind of jumped back in, again, around the 110, 112 mark, where I had previously bought, then taken a loss, then jumped back in. This is a frustrating pattern that I'm personally working on in myself. But now I had a little bit more data to back up this decision to go back in, and that was we now have this support here around this 106, 107 level that it opened at. We're going up. Now what I'm looking for now that I'm in is I don't want to break I don't want to break that foothold. So at this point, this is still my foothold. I don't want to break that. So anytime, and this is going minute by minute. So anytime a red candle appears, anytime any sign of resistance, I'm watching for a trend reversal signal where we potentially are going to break that level. Every time one of these appears, that's now like a mini foothold. That's a little notch in the rocks, as we're climbing up. So now temporarily, so this is my ultimate level down here, but now after we come out of this red candle and we start to get a new support candle, now we kind of picture a new little bit of a foothold here, only in the sense that now this is now the level where we're looking for any warning signs of a trend reversal. And that is to say that there will be another resistance candle, there will be another down candle, and as long as it doesn't break the previous foothold, we are still in an uptrend, we are still doing well. So we start climbing up, and then sure enough, here we have the next resistance candle, which pops up. So we hang up, we try to push our emotions aside because nobody likes to see price going down after getting a big price bump up. But what we're waiting for is where will it stop? And by stop, we mean when is the next candle going to go green? When is the next green candle going to show up? We see that we only wait a minute and then green comes back. And most importantly, green comes back and we have this gap here between these two footholds. And so we're confirmed in the uptrend. And so we're still doing good. And now we keep our eyes on this level, because now this one is where our next confirmed trend reversal, potential trend reversal, is when we break that. When we lose that, then we're on our toes. Maybe we just get straight out because that is a potential for trend reversal. So we keep moving, we move up here, and then finally up here, we seem to get a strong push down. Now, in the moment as this is unfolding, obviously you don't get to see this perfect candle all at once. It slowly forms, but you see it form in chunks and pieces. That's where emotions can come in strongly. But as this thing starts to break down, and now it comes down here where it's testing this previous level, I try not to can't say I don't, but I try not to get out until we've confirmed at least the high probability of trend reversal. So what I mean by that is in the minute of this one candle here, I'm trying to hold on tight, not get emotional, and just jump out, because as it's dropping, there's the potential that it could meet this level. And if it meets this level, we're still all good. We're still have a high probability of being in the uptrend. And it could even dip below, but if it doesn't close, if the candle doesn't close, breaking that level, then again, probability still remains strong that we are in that uptrend. However, that doesn't always happen because emotions run very high in this minute as this is happening. So what we see happen here, though, is now it closes, and the close is at the same level. It's the same level of the wick, and it's lower than the body. So we're on alert for the next minute. The next candle is going to be very telling to us as to what we should do. Now, because of this buffer up at the top, that's why you want to be so structured and so disciplined to buy in at a known foothold or at the development of a foothold, because you want this buffer down here of profit, because when it gets to the top, you're going to feel like you're losing. You're going to feel like you're missing out on something just because you have to wait for this confirmation. You don't have to, but I mean, it depends on what your play is trying to be. Maybe the profits are good enough here on the swing up that as this is forming, you decide, I just want to take my profits and go. But nonetheless, The next minute happens, and now we start to get, again, another red candle. And this one dips down. You can see the long wick at the bottom. It tried to come back up, but it just couldn't come all the way back up, and it closed, and now we move to the third one. Now we are officially in a high probability scenario of a trend reversal. And now if you've actually held on this long through these 3 minutes, it is definitely time to close the book and wait for the next arrival of a foothold or a potential place to grab onto. And as we keep going here, we see that is indeed correct in that, we broke and then we got another big candle down. So now we're way on a potential, or not even potential. Now we're basically confirmed trend reversal where we are now going and running bearish. So what we need to see to signal the reverse of coming out of a downtrend and going back up into an uptrend is we want to see a support candle and then a resistance candle, and the resistance candle that comes up, we need it to close above the previous resistance. So we kind of see it tries here. We crawl up, but then now we're kind of breaking again. We're just kind of wish-washing around, and then all of a sudden we break down again. So none of this here is a good time to buy. This isn't the appearance or confirmation of a foothold or a place to buy into. So if we're being disciplined and being robotic, we sold out up here, and we have not bought back in because we have not seen what we needed to see to get back in here. And sure enough, we break down, and now we're even more critical because now we are at this bottom level, which on an IPO where there is no history, this is the only thing we have to go on, that this is the main support level. We do not want to lose this level. And as time goes on, it flutters around here. Again, no strong confirmation of uptrend, but we are holding the level. However, we're being robotic. We're being, non-emotional. So we are not buying in yet because nothing here is showing us a trend reversal. And again, I realize hindsight 2020, but looking at each of these candles as they formed, nothing is clearing. Once we get this green support candle here, what we're looking for is something to clear the next push, to push above this, and then the next resistance to close above this. We want to see up before we think about buying a confirmation. So we didn't get any of that. Sure enough, here we go, and we slip further and further down. And then this thing, now because of it being an IPO, now we're just completely uncharted territory. Spoiler alert, I was not robotic. I was not great on this. And I ended up losing what I was willing to lose. And once I did that, I walked away because I'm not going to revenge trade and try to win it back or try to get my money back from the house. I messed this up. This was my opportunity at the beginning, being an IPO, being potentially overvalued, being that it was a $78 offering and it opened at 105. Once we started breaking down here, I had no interest in sticking around. I took my gamble, and I walked away. Now, the other thing that I wanted to call out real quick, because that's all well and good in analyzing the candles, but and technically that's all you should need to do is just look at the candles, because indicators can be funny things in that indicators can also become high confirmation bias machines where you could find an indicator to tell you what you want to know, and that's not going to help you be more successful. However, the one indicator that I like to use in this particular instance, not even just that this was a new IPO, but in general, is VWAP, the volume weighted moving average price. The reason I like to use this is because keep in mind the fundamentals and the mechanics of what is happening in the stock market, in a stock price. It is a constant tug of war between buyers and sellers. You have a lot of consumer buyers and sellers doing very small micro transactions. You have a lot of whales and large institutions that want to beef up their portfolios or shuffle their portfolios around. And the whales and those big institutions, they're not playing the games that we're playing, that we're talking about here. All they want to know is this price fair? And if it is, give me a whole bunch. Or is this price fair? If it is, sell a whole bunch. If it's overvalued or undervalued, they're going to wait for that fair price before they move large quantities. And it's them moving those large quantities that can sometimes lead to bullish or bearish turns in a stock. I believe we have an episode on VWAP that was a while ago, but worth checking out. So bringing VWAP now into this equation here, which I was watching while doing all of this, and that was the other reason why I turned tail and ran once I had taken my losses. Let's turn VWAP in here. So the blue line is that quote unquote fair price. That is the price adjusted for the amount of volume being traded. And anything above that is a strong bullish trend. Anything below that is a strong bearish trend. And VWAP itself can oftentimes act as a level. However, chicken and an egg, whether VWAP's the level or whether it is an actual level, you could certainly make an argument either way. However, I like to have VWAP on when I'm trying to scalp or day trade. And this is exactly why. So we took this pop up, and right at, like I said, when I bought this initial one, FOMO kicked in. Nothing about this said I should have entered. It was running up. We were far away from VWAP. We were going to the upside, and that's the worst time to buy. Then we see that we start to come back down, and if we're being disciplined and regimented, we see that we come down to VWAP. We break below it a little bit, but then we start getting support. Once we start seeing this support, now this is a decent confirmation of a positive uptrend because we hit VWAP. We didn't sustain below it, and we started to bounce back up on it. So, could have gotten back in around this 110 area once we kind of had factored VWAP in as support, and then we start running. And so now, as we're running here, we don't want to wait for a retest of VWAP. We want to watch the candles and kind of do that analysis we already talked about. And you can see, though, we ran up, we come crashing down, we hit VWAP. I mean, this is a big crash down. I mean, we're almost 120, and we come crashing back down to 110. And when you're not looking at it in the context of VWAP, it looks like, when's this thing going to stop? It's just crashing all the way. And then all of a sudden VWAP comes in, and oh yeah, that makes sense. Because we came down to VWAP, and so we kind of stalled, and we sputtered a little bit as this thing was trying to figure out, now that we're at an average price, are a bunch of institutions or hedge funds or whatever going to come in and buy and then kick off a bull run? Are we going to lose VWAP, drop below, and then officially go into a bear trend? So this was the sign right here. Once we were hugging VWAP, that I was anticipating a confirmation which way the day was going to go. And then as we get going, we see that we start to lose VWAP. Now we are a reverse situation. Now we are confirmed bear. We are below VWAP and running away. We kind of come back up a little bit, but we can't quite get there, and we run away harder. And so now this is just all no good news for being long on a position. Being an IPO, there were no shortable shares. So there is nothing to do here. There's nothing to see here. This is not shortable. Now, once we lose this and we start running away, if the position is shortable, that's a good time to scalp short. However, that's not the case in this one. The other one, we could pop over here. This one is just to show you. So now we're over in the land of crypto, and we're looking at Shiba Inu. The only reason I'm looking at this is just because, again, liquidity is king. Nothing is more liquid than some of these crypto coins or tokens. However, I don't like day trading crypto because there's just not a good platform where you can get your orders filled reliably or anything like that. But charts are charts, and so this could easily be any particular stock. Okay, so let's just pretend that this isn't crypto. This is just a stock. And again, we're looking at the minute. So let's pretend this yellow line is the day's open. This is when trading began for this particular day that we're looking at. And really what I want to showcase here is not the unique scenario of an IPO where you just don't have, like I said, that history. You don't have charts to look at or whatnot. One thing I always like to do before going into a stock to day trade is I do a quick look at the daily chart, and I draw some notable levels. Typically levels will interchange on their time frame. It really becomes nuanced, and you just start to get a feel for which levels are important. We've talked a lot about this on previous episodes, so certainly encourage you to look at that. But it's particularly when looking at the dailies, when we look at a swing, the start of the swing, any notable stoppages or stalls on the swing, or any notable reversals on the swing are what I'm looking to just throw some lines down before I go get into the day's action. And the only reason I do that is just to give a heads up of if I'm shorting something and it's going down, and then I had thrown down a line for a level based on the daily swings, I can have that context in the back of my head that as this thing's going down, maybe I don't even want to test, like we were just talking about. Maybe I don't even want to test the reversal, the trend reversal or not. And I just know that as soon as we hit that level, I'm out, I'm closing it up. And I'm going to wait for whether or not the trend reverses or pushes down. That's a very valid strategy, I think. And that's why I like to throw down just some loose, important levels, not super detailed or anything like that. But so let's just take a quick look at this and pretend like this is a stock that just opened on the yellow line here. That's market open. We see that we come out, we dip down, and then we hit this bounce. So we're kind of up, but let's just say we're being robotic here. And so we did not buy when we saw that bounce. We're waiting for confirmation of a trend. Right now we have no confirmation of a trend other than it hit this level and bounced up. So the first thing we want to do then is just drop a line in here, just to signify, let's actually make that, well, yeah, let's make it white. I don't like it being green. That's too presumptuous. So we drop that in there. Now we're waiting for either confirmation of this via another test where we come back down and then we bounce off of it. So then we buy back in on that, or we're waiting for those footholds or any of those other indicators. So we start going back up, and then all of a sudden we pancake up here, and this doesn't look good. So we're being disciplined. So we're not buying in as these candles form because they're just not pushing through. This is getting squished up here. So because we're seeing that, let's go ahead and drop another one of these lines up here to say that's potentially an important level there because we squished up against it and we couldn't do anything. And then all of a sudden we start to see this coming back down. So we're glad we didn't buy in. And now we're approaching this level that we just threw down previously. And now we see that we've broken down. We're broken below it. So obviously that's not currently acting as support. We see a bounce here. Let's go ahead and throw when we see that bounce. So we're just kind of charting this as it forms, because we're still, this thing is just out there swooshing around and we're trying to find something predictable. It's getting good swings on it. But we don't have a solid entry point yet. We see it come back up and we see it actually get rejected off of this level that we previously drew. So that's why these things are helpful. because now we can see, nope, it got rejected. So that's kind of a confirmed bear trend or a confirmed resistance. So it's possible that maybe if we are able to short this stock, if it's a stock, that's possibly a time to open up a short position, just to see where this thing goes. So we're sticking to the data. So yeah, sure, we open up a smaller position. Maybe it's not the full size of what we have in mind, because I do like to ladder in on some day trading, which isn't 100% scalping at that point, I guess, because I guess scalping you would try to throw in and pull out, and but nonetheless, we short some shares. Sure enough, it runs down and it breaks below this level. So now we're feeling pretty good about that decision to short that. And once again, we kind of pancake here. We push up and we reject that again. So maybe we short some more on this one, and then we run down again. And again, we're opening that decision to short there because we are not breaking that level that we just saw. And then we come down here, and we're kind of slowing down. And if we look through the lens of VWAP, we still see we're pretty far away from VWAP. It's not uncommon for something to drift back to VWAP. You know, the longer something, I guess that's what I'm trying to say. I've noticed, it's by no means a rule of thumb, but it's, again, context that's in the back of my mind. The longer we're away from VWAP, the more potential there is to drift back, or by laws of mathematics and averages, VWAP will trend closer to where we're at. And so we see things like this where the price kind of levels out. So again, if I'm opening these shorts here and I start to see this price leveling out and VWAP's kind of drifting down, you know, I'm not going to say I nail this just because that's too easy to say in hindsight, but somewhere in here, certainly on this big up candle, if I'm shorting this, certainly on the big bounce here, but hopefully before, when things slow down, I'm going to close it and wait and see what happens next. So we get a strong support and we get another rejection here. So when we get this first candle up, that's a notable gain there. And we've actually cleared, once this closes to this candle, we've now closed above previous resistance levels. So we decided to drop a line there just to indicate that had some pretty strong support. We get now 2 minutes away from that, and we're pushing up against this level here, but then all of a sudden we reject it. So maybe we're still in a downtrend, and that was just a little blip. We come back down here, and then we get a bounce and we start going back up. And then now here is where things converge. Convergence can really have a powerful effect on indicating trend reversals. So what I mean is we can see VWAP is drifting down, and we also have this level right here, and they're just a bit away from each other, but we can see this bounce up to VWAP, potentially testing VWAP, gets rejected. So technically maybe still bearish, but we're also not dropping below this level. So now this level's potentially gotten flipped into some support, and we kind of get squished into this channel here, and we're pancaked. I'm not making any moves on this. I don't like to move as things are being tested, because now this is a moment where anything can happen when we're sitting on VWAP, when we're up against a level. The scales can tip either way, at least in my mind, at my current knowledge level. And sure enough, we finally break down. However, we break down shortly, and then we come roaring back, and now we close above VWAP and come back and hit VWAP, and then now start a bullish candle above VWAP. So this is kind of the moment where, if I'm looking to day trade long, this is kind of the action that I'm looking for in this history as it unfolds, is to see the potential trend reversal and get that confirmation test on VWAP above a level that we've already identified, that we are officially reversing the trend and going up. So then I'll take some action as we do that, and we can kind of see that those levels that we already drew at the quote unquote start of this trading day are still playing a role in the action that's happening here. Those levels combined with VWAP, as we can see right here, where we run up, we push past this level, we come back down, we get a little test to see if we can get some support off of it. We can't, we lose it, but then look who's here to catch us. We come bouncing down right to VWAP, we get our support off of VWAP, and we start running again. It's hard to say. I'm going to stop predicting what I would have done because, like I said, that's not fair when we're looking at the whole chart. But these are things like I haven't actually looked at this portion of the chart other than I saw the volatility, and that's all I wanted to see to show this point. But we can see we get that support off VWAP. We come running back up, and now we're up to this level, which again we drew at the start of the day. And we see a test there, a test of the level, hitting the level because we already drew it, because we already threw it on the chart. That's a good idea to sell as soon as you touch the level, to be robotic, because that's going to be your potential maximum profit if the trend is reversing. And if the trend isn't reversing, there's usually the probability is in your favor that there's going to be a stall while it figures out what it's going to do before it gets going again. So we would potentially close out here, and then we start to get a reversal and yada, yada, et cetera, et cetera. But the important part that I wanted to call out here was just how sticky levels can be. And the one thing I try to do is, aside from what I said at the open, where I throw just a few key levels down from the dailies. If I'm trading, if I'm making a play that's going to open or close in minutes, then I want to look at the minute chart and plot accordingly. If I'm making a play that I'm planning to close and open in days, a longer play, kind of the auto plays that I talked about on a previous episode, then I don't care about the minute chart. I don't care about the weekly chart. I want to look at the daily charts because that's the time frame. I'm looking at potential days. And I think that's important to, for the most part, chart on the time frame that you're looking to open and close the position and make the play, with the exception, like I said, of some key levels that you can glean from the daily or even the weekly. But daily is a good level that I like to look at least just to set a basis for going into that. So that's the gist of the, like I said, learning out loud moment of, that's how I process my day trades. That's how I process my scalping. By nature, it's a very emotionally trapped situation where you're going to find yourself in positions where you're closing too early, you're buying too high, you're missing your opportunities. And that's just part of the fumbling around that we always talk about, where you don't get a sense of how strong those emotions are until you're in there with real money, which is why you mitigate your risk by not getting in there with money you can't stand to lose. Every time I go in, it would be very sad, but any money I go in there with, I'm walking in there knowing I may not come out with that. And then, like I said, with how I messed up the RIVN Open, it hits a tolerance level, and that is what it is, and I'm walking away. And now there is one level of my playmaking that I need to get better at, and that is using the tools that are in, for me, the Thinkorswim platform, where you can actually structure and format your orders to be, click the button and you have a template. You have an order template laid out where when you click buy, then dink, there's an automatic sell, profit or stop. And you can kind of be even more robotic in that way to know that as soon as I buy this, I want to drop a profit target here and drop a stop loss here. And then you just click it and wait for either one to fill. taking profit or loss, and then wait and then hit your next point to dive in. That's something that I need to get much better at, because that's kind of ensuring that robotic behavior, because because the goal is to set that template up beforehand and in a smart way, and then you stick to it and you don't let those emotions of hovering over the button to buy or sell, because you've already set the rules. So I need to get a lot better at that. And I know that Sprocket888 has been getting into a lot more of that templating. So what do you got there?
So here we have the active trader window. And like I mentioned last week, this window is really squished for the resolution of the video. So normally on my trading screen, it's much larger on my monitors, but for the purposes of this video, I have to kind of squish it down so you can kind of see it. And the part that I want to focus on here is the order templates. So I didn't really touch on this too much last week, and I had a couple of the conversations with some of the users in Discord, and I realized that maybe we should visit the order entry just a little bit, because one of the things that's very important when you are day trading or scalping is you're looking for very quick movements, and you're typically entering a position or at least an order that is very large. Okay, so now your max loss you're going to control by your stop price, and so the normal rules of position sizing still apply, where your max risk or your max loss should be sized appropriately to your portfolio. And what I mean by that is when we get into the trades, right? You might put on a position of 1,000 shares or 1,500 shares, which you wouldn't normally put in a position that long if you were going to allow for a downside move of, a loss of $1 a share, $2 a share, something like that. However, when you're day trading or scalping, what you're looking for is that quick uptick. So you're going to look for the perfect setup. You're going to enter that perfect setup at a particular time, and you're going to set a stop loss at some point below where you entered. And keeping that tight to where you enter it does two things. One, it's going to limit your loss. So, you're defining your max risk by where that stop point is. Now, the drawback is if you set it too tight, you might miss, it might come down, hit your stop you out, and then proceed on with what you're hoping to get. The downside of that is if you set it too far, your max loss can become, too great or uncomfortable for you. So it's really a matter of balancing that. How much do you want to pay to take a shot? Okay. So I equated a lot to admission. So, or entry to a lotto ticket, right? You're going to pay X dollars. That's your distance from your entry point to your max loss. And that's what you're putting on the table. Now, maybe it works out, maybe it doesn't. And that admission price is what you're paying to see if you're going to land something or not. And so because that price can be very tight to where you enter, and because you're probably doing this on highly volatile stocks, you want to keep that tight, and you want it to be there as soon as the order fills. You don't want this time gap between, oh, I clicked buy, I got filled, now I got to put my stop in. You want your stop to go in right when you put the order. And if you're putting that in, you might as well put your take profit orders in too. And so all of this can be set up in the active trader order template. And this is what I want to touch on. So at the top here, you have there's a trade tab, which basically brings you an extra order template. You can get the order template if you're using the trading DOM here. So if you have the DOM up, which stands for depth of market, DOM, it comes with the order buttons and order template up here. I find this a little bit squished when I want to set up a template. So when I'm setting up a template, I'll actually push the trade button, which will bring a larger horizontal menu across, and then I can push I can expand that down to get my template. Now, normally when you come in here, you just get a single. Okay, a single order, which basically means, hey, what I'm doing is you set the quantity. You got these quick buttons here. These resize automatically depending on the underlying and what kind of makes sense and what Thinkorswim believes should be the defaults. And when you just kind of click each of these, it'll automatically just set your quantity to, whatever those are. And you can set your time in force, and you can change this default because we're scalping. The time in force I always use as day because you're scalping during the day. There's no reason you would want this order to persist good till canceled. Maybe if you were trying to scalp after hours, you would want to put EXT. I don't scalp after hours. So if I'm scalping, it's going to be a day order. Now there's other templates here. So what you see here on the top, single OCO, trigger with bracket, trigger with 2 brackets, trigger with 3 brackets. These are built-in templates that come in Thinkorswim. And so it sets up a structure for you to create your own template. Everything else you see down here are templates that I created and then saved. So if you want a particular setup for a particular underlying, for a particular type of scalp, you might want to name it something and save it, but we're not going to get into going through these on my account. But what we are going to do is hop into the brackets up here. The first order is a OCO. Okay. And this simple is order cancels order, or order cancels other. And what this is it puts will default to placing 2 orders in at the same time. So one is your take profit and one is your stop out. And then you can choose what type of setting that you want. And when you get to choose how far you do your stops, you got a couple of options. So right here, you got your tick offset, you got a percentage difference, and you got a plus or minus dollar amount. So, the tick is not always, it depends on what the underlying is. So, sometimes they tick in pennies, sometimes they tick in fractional pennies. And so tick is basically just whatever you're trading, how many ticks down do you want that stop to be, and how many ticks up do you want that buy to be. So what you have here is basically what you'll get is an order that says, hey, you're placing a stop order, and your other one should be, you should have a stop 10 ticks above, in this case, the bid ask of there. So in here, this underlying ticks in pennies. And so, 10 above is 20 or 69.20 based on where we zoomed. So you'll see that stop order come in up there, 10 ticks above. So if I were to make this something a little bit larger, let's call it 100 ticks. You'll see right here, we get order right there of 100 ticks. So the other one is wherever you set it. So this is kind of your stop out, and then the take profit on this case would be 10 ticks above. And you can change this whether or not you want a stop or a trailing stop. Now the trailing stop, what it's going to do is it's going to start 100 ticks out, and in this case, then it will trail the underlying, so it'll kind of follow it, and then it will never go backwards, but it's kind of like a roller coaster. As you kind of go up that hill, you kind of click, 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 click. And so it kind of moves that stop order with the underlying. And then if the underlying starts coming back down towards that stop, it will stay where it was. And then basically it'll just kind of follow the underlying up and down. So that's a trailing stop. I don't typically use trailing stops. I usually use just plain stops, and I might slide them myself, or I might leave them set where they need to be. This order is okay. This order kind of assumes that you've already created an entry, and this is, your exit plan from that. But this doesn't really cover you if you want to get your whole order set up on one-click entry to automatically have your entry point as well as your profit and stop loss point. So that's where the next order type of trigger with bracket comes in. So if we come to the trigger with bracket, what you'll see here is you'll see, two things. So one here is your limit order for profit, and the other one is your stop order to limit your loss. And much like before, you get to choose how you want these to be configured. The difference here is you also get a quantity of, how many do you want to take off the table at this time. So let's assume that you're basically just making a single trade on a bunch of stock and you have one profit point and one stop out point. That's where you would use this single bracket. We'll touch on the other brackets, and that's where you want to basically might want to ladder out or ladder down, you know. So you might want to say, hey, I'm going to jump in at 300 shares. I'm going to take 100 off here, and I'm going to let another 100 ride till here. And you might have varying stops. Those are when you have multiple brackets. But for simple entry and exit, let's just say we're going to go in with 100 shares. In this case, let's just use the plus minus to give just dollar amounts. So shrink that. So we'll say, hey, you know, wherever I enter, I'm going to have a profit target of, let's say, $5. I think this thing's going to move up $5. Keep in mind, these are really aggressive numbers for this underlying. This underlying doesn't move that much, but for demonstration purposes here, and let's say our stop is $1. So what this allows us to do is now when we come over here, what you'll see is we pick the entry point where we want to come in. And so if I pick here at, hey, let's wait till this thing falls to 68.16, I would click here. And what that would do is that would put a buy at 68.16. And then it would put a stop out at 67.16, and it would also put a take profit order in at 73.16. And so with one click, I get my order entry and I get my two protections. So the two protections are in OCO order, so you don't have to worry about it, you know, triggering here and then coming back down and triggering again. As soon as it triggers one of those, it's out, you're done, you're flat, you're gone. So here, because I don't have auto send in, if I click this, I'll actually get a confirmation screen that'll basically say, hey, you're going to put this order in. It's going to take this much buying power. Here's your details of the order. Are you okay with that? So you got a couple options here. A lot of times when I'm in the day trading screen, I know what I want to do and I want everything to happen right when I click. So you have two options. One, you can actually hold down control and click, and that will auto send. And if you're not holding down control, think of that like the safety. If you're not holding down control, you'll get a confirmation screen. The other thing you can do is there's this button up here called auto send. And if you enable that, it doesn't matter. Whatever you click happens right away. You get no confirmation. So if you kind of know what's up and you don't want to see these confirmation screens, you just want things to execute very quickly, I almost always have this checked when I am actively using the screen. If I'm not actively using the screen, I basically try to make sure that's unchecked to remove the safety. If you don't trust yourself, like I said, you can leave this unchecked and you can use the control button on your keyboard to get the same effect. So if you have control, click, it's auto send. If you just click, then you get a confirmation unless this is checked. So what this will let me do is in my depth of market here, there is a column for bid and there's a column for ask. So depending on whether or not I want to enter short or I want to enter long, you'll see the orders are automatically pre-configured. So if I am entering short, when the price falls to a certain point, I would take entry here at 71.16. You can see my stop out would stop out on a upside move of about $1. That's my max loss. And then my profit target would be down at $5. So that's cool. Now we can get a little bit more fancy and we're going to go right to another order type, which is trigger with two brackets. Okay. Same thing, except now you got two bracket orders. So let's say this time I'm going to jump in at 300 shares. Now I got two brackets. I got bracket 1 and bracket 2. So in bracket 1, I can say, you know what? Bracket 1 is my first take profit target. So in my first take profit target, I've got 300 shares. I want to go ahead and pull my profit on the bulk of them. So I want to pull profit at 200. And let's say my profit target is a little bit, you know, conservative. Let's say it's a $2 profit target. Okay, so I'm going to pull off 200 shares once this thing moves up $2. Now, I've got 100 of them left. So I'm putting an order in for 300. I got 100 of them left. So let's go ahead and set another bracket to say, hey, sell another 100 if we get up to the $5 mark. What I typically do is I usually keep my stop loss the same. So this is, you know, hey, if I jump in at 300 shares, I want to bail out if I drop $1. So this will put a hard stop $1 below my entry point. And then this takes profit at $2 up for 2/3 of my entry. And then as I come up again for another 1/3, it would take another profit. And so what that looks like now, if you come over here to the order, you can see right here, I got this at 63.66. You can see my stop out, the bracket, both brackets stop. You can look at if on the left there a little bit, you can see the two brackets. The first one is the first bracket order that basically will take profit at 65.66 at 200 shares, and automatically that other 100 shares will take profit at 68.66. You also might want to say, hey, for that other order, that runner, let's go ahead and let's set that as a trail stop. Okay. So what the trail stop will do is it'll initially set it to $1 below where we enter at, but it's going to kind of follow that thing up. So how far behind do you want that thing to follow? So this will, if you trail $1, and this stock makes it to, let's say $4, that trail stop will be at the $3 mark. And let's say it doesn't go any higher than the $4 gain. So if it makes it to a $4 gain, that stop out would be at a $3 gain. And so if the price falls from there, it will stop you out at $3. So sometimes when I set in runners, if I do set in runners, that one that is kind of trailing up, I might do a trailing stop. But generally what I might do is just manually pull that stop up as I watch the chart develop. Okay, so now I got a couple orders in here. One thing that's kind of nice is if you just say, hey, you know what, I'm going to step away for lunch, or you're going to walk away from your computer and you want to cancel all these orders, but you don't want to hit all these X's. You got a button over here that basically says cancel. You can choose to cancel all, cancel just your buy orders, cancel just your sell orders, but typically I'll go ahead and use cancel all. And what that will do is, boom, it will wipe out all of my orders right away and throw them up as canceled, clear off the board. Another really helpful button that I use very frequently is the flatten position button. And what this basically means is whatever you got on, get out. Just get rid of everything, whether you're long, whether you're short, you don't have to worry or think about it. Flatten just means go to zero. And so what you'll see here is it'll show you what your position is currently. So I actually have 200 shares of Citi, not in a day trade scalp, but it's more of an investment. And if you push flatten, it basically says whatever this position is, short or long, it's going to take you to zero. So if I were to push flatten, it would put in a market order to sell 200 shares. If I was short 200 shares, pushing flatten would put in an order to buy 200 shares at market. So a lot of times what I use the flatten for is when I'm scalping a particular underlying and, we're riding up, I always sliding up my stop. However, sometimes when the top starts looking a bit toppy and I want to get out and just cancel all my orders and exit the position, I'll push flatten, as I'm starting to see the candles form that maybe the underlying is going to start coming back in, or if I'm short, if it's going to start profiting back up. And so flatten is very, very useful for that. Now, reverse, another useful thing. I do not typically use it because usually when I am switching between short and long, I want to see the trend reverse and then get a trend confirmation, which doesn't happen at the same time. And so I would be exiting a long position when I started to see it fizzle out and start to head down, and that's when I would exit. Now, I wouldn't enter a short position until I see a confirmation of that bear trend or that bear strategy. And so what reverse does is it will immediately flip your position order. So if I was to push reverse here, I am long 200 shares, it would immediately sell those. It would sell 400 shares to basically flip my position to short 200. So that's useful to know. It doesn't fit in my trading strategy, so I do not typically use that button when I'm trading, but that is what that button does. So one of the things that I have been frequently scalping is natural gas. So let's go ahead and look at natural gas. And I trade this with Renko bricks. And a lot of times my Renko bricks are basically 2 brick sizes, 2 ticks for each brick. So what I'm going to do here is I am going to, and if you kind of look, it really varies how many bricks you get on a reversal here. But let's just take a look here at this chart, and you can kind of see, look here, here's 2 bricks, here's 3 bricks. This is a little bit more, but what I'm really looking for on a reversal is a breaking of the previous trend. So I basically need another brick that is higher than this brick before I want to get out. And so if I'm going to enter, I'm going to enter, let's say I'm on this downtrend here, right? My entry is going to be 1 brick below this previous low, and my stop out is going to be, 1 brick above this previous high. So I am trading typically with 2 ticks in each brick, and so you have to account for this. So if my entry is 1 brick below, my stop out is going to be 1, 2, 3, 4, 5 bricks up, which is actually 10 ticks. Now, I actually want to give 1 more brick here, so that would be 11, 12. And so I would exit at the 13th tick backwards. And so what I'll do is a nice then order that I'll have is I'll say, hey, I typically only trade a position of 1 here because the notional is so large. So what I'll do here is I'll switch these to ticks, and I will say my stop out is going to be 13 ticks back. So when I put that entry in, that should give me a stop out 13 ticks back. Now my take profit, really this is one where I'm going to kind of slide it a bit, but it's typically going to be, 10, 20 bricks down. So let's just go ahead and throw in here 40 would be my take profit bricks. And probably what I do is just pick something that's far enough away that it's not going to trigger like right away. And it gives you a little bit of time to slide it based on the chart, because my take profit really varies a ton based on where the chart is, where the price action is. And so let's just say, but my stop out is pretty common. So most of the time the trend reversals are, a couple bricks back. So 13 is great for there. I can come over here and I can push save custom order template. So I can come up with a name for this, NG scalp 2 tick Renko. So that's going to save it as this template right here. You're going to see it's going to show up down here. So if I ever was to come back to this screen, I'm trading something else, I'm coming back to natural gas, and I'm like, okay, where's my order? Oh, two tick Renko scalp. Okay, so let's say I am targeting here for this. Let's say this is where we are. So I didn't actually see all this. Let's say that right here we've got our pullback, we got our 1, 2, 3 bricks, we've got our first red brick forming. So right here, I want an order, 1 brick below this previous low. So if I came 1 brick below, this would be 47.88, and this would put 13 ticks back at 48.02 would be my stop out. And if I come over here on the chart, you can see that 48.02 would be about 1 brick up from the previous high. So that is where I would set that. And if I sent that order, I basically would get my go short here, cover your short up here, and then my profit target would be way down here, 40 ticks below that entry point. And I can quickly just pick my 2 tick scalp. I can hunt for my entry price here, and you can see right there when I put it in, it's going to put my stop out order, it's going to put my entry order in place, and it's going to take my take profit order. So that is the stuff that is specific to Thinkorswim. Every platform that you guys have or trade in has some sort of depth of market screen. That's the big long chain of all the prices. You can zoom in and out in this to designate different how many ticks or how much difference between each of the points. So if I zoom out, you can see this thing starts getting much wider between ticks. You can zoom in, zoom out, whatever makes sense. And most of the trading platforms will specifically let you trade directly from here. And they almost all will have some sort of mechanism that will allow you to fire off the trades without really waiting. So this is, like I mentioned last week, the exact type of thing that paper trading is awesome at, in my opinion, is you can log into a paper trading account for your particular broker, and you can figure out how to turn all the knobs, tweak all the settings, configure your stuff. You can do it with the market open, and there'll be live data coming through. Like I mentioned in last week's episode, that is not a great way, in my opinion, to mentally prepare, because it's really just a simulation. It's funny money. You're not really emotionally attached to the trade. However, if you're trying to figure out the platform, figure out what setting does what button does what, it's a lot more comfortable to be pushing those buttons when you know that there's not real money connected to that order. So I highly suggest whatever platform you're using in a paper trading capacity first, then switch over to the actual live trading and start with small positions and ramp up as your comfort level ramps up. These order templates for me are an absolute must. Put them all on all at once. You don't have this time gap where if all of a sudden the world came to an end or some crazy thing happened, especially in the volatile stock, you can blow through stop points really fast. And having those orders come in the instant your order is triggered and filled is an absolute must. I would not trade it any other way. Sure, it might be unlikely to get caught off guard, but if you do, you could be in a really bad position, because for that gap time, you are completely open to limitless losses. So that brings us to the end of this week's episode. I hope you enjoyed taking a little bit more depth look at the trading active trader tab in Thinkorswim and how you can actually templatize your orders so that you can enter them much more quickly and much more confidently, knowing that when an order fills, you're completely covered on your max loss, and you can even set your take profit targets ahead from there. That is super valuable for having comfort in entering a position, knowing that your pay to play is exactly that max loss, and you can just keep trying to catch those different up waves or down waves if you happen to be shorting the market. Hopefully you also enjoyed getting a glimpse of the methodology that Viper takes when he goes in for his scalps and the things that are crossing his mind. So love to hear from you guys. Let us know if you like this particular type of content, or if there's something other kind of content you would like to see us bring. Hop in our Discord, leave us a comment in there, chat with us. Like I said, we're in there most days, and we love to hear what you're trading. How do you trade? What do you like to trade? What do you want to learn? This is all really learning for us. As Viper mentioned, neither one of us are particularly good at scalping, and what we're showing you here today is just the way we do it at this point in time. We're constantly evolving, we're constantly changing. So 6 months from now, we might look back and say, wow, that's definitely not something I do anymore. So hit that like, hit that subscribe. Love to see you on our channel regularly, and love to add content that's specific to you. So leave a link or leave a comment below, chat in the Discord. Otherwise, good luck this week. Good luck out there. And remember, think outside the block.